Or is Bitcoin perhaps something different in its own category? Your take, CJ?
Yeah, that's a great question. I think it's a little bit of both. I mean, traditional assets like real estate, automobiles, equities, and cash equivalents, they can all act as collateral. And I think that's probably the big gap, the big jump to understanding is that most people go and trade their time and energy for a paycheck. They spend that paycheck to pay their expenses. And if they're lucky and blessed, they have a little bit of that paycheck left over where they can do some saving and investment. But when you save and invest enough, or you finally hit that home run and one of those savings or investments pays off, you have the ability to make a bigger decision. Maybe like buy a home, buy a car, start a business. And from there, things kind of start to snowball and you get more and more cash flows. And what you find out is you trade less and less of your energy clocking in and out to now managing people who clock in and out and then create cash flow by giving value to the economy through your business or through your venture. So when we look at those forms of collateral that we would accumulate through our life of working, real estate is actually the most popular form of collateral in the world. So when they removed gold from backing the dollar in 71, real estate went through this kind of monetization / financialization process where you could tap into your home equity with all these different financial tools and products. And it ends up being a really good tool because if you buy your home and you have a 30-year mortgage and you've been paying it for 10, 15 years, the value of your home has gone up over time. So you have some equity value in your home, but it's kind of trapped, right? It's there. It's like, I can't get that equity unless I sell the home, but I can't sell my home because I got to live in my home. So, how does this benefit me? How does this help me? Well, you can take out a home equity line of credit or a second mortgage. It allows you to tap into that equity to borrow against your home's value so that you can take that money and deploy it into whatever you want to do. So when it comes to how you use real estate as collateral, it becomes a very powerful tool to help you leverage and gain access to wealth that you can't directly spend like you would your dollars that you get in your paycheck. But the difference between Bitcoin and real estate and automobiles and equities and cash equivalents is significant. With real estate, it is not a perfectly liquid asset. And when rates stay high like they have, it could take years to liquidate the asset. Unless you want to take a huge price cut on the value, you could be holding it for years. In automobiles, they're an inflationary asset. They lose value over time significantly. You drive it off the lot, it loses value. Every mile you put on it, it loses value. Every ding, it loses value. So it's not really a strong form of collateral because it loses value over time. And when you talk about equities and cash equivalents, those are pretty solid forms of collateral because they are liquid. However, unlike Bitcoin, they have no finite supply. Companies can issue more stock and governments can issue more debt. So because we have that dilution or that increase in supply, they don't serve as that good of a long-term collateral. Bitcoin gives you the best of all of those worlds together. It takes the hard money aspect and upgrades it to absolute digital scarcity. There's 21 million. There'll never be more than 21 million. Therefore, your collateral cannot be diluted while you hold it. Also, when it comes to the relationship between the borrower and the lender, Bitcoin is 24/7, 365 liquid. Unlike real estate, you can liquidate it with a couple of clicks on your computer. Unlike automobiles, it doesn't lose value over time. Bitcoin is engineered money. It was actually strategically designed to leverage the natural laws of economics to accrue value, to appreciate in value over time. So unlike an automobile where the debt becomes more and more risky because of the loss in value of the automobile, in a Bitcoin line of credit or a Bitcoin loan product for the lender, it actually becomes less risky because the burden of the fiat denominated debt shrinks over time relative to the value of the collateral. So the car goes down in value over time, but Bitcoin goes up in value over time, which actually makes it a safer loan. So Bitcoin really is the next evolution of collateral. And I believe, and we believe here at People's Reserve, it is the most pristine form of collateral in the world due to its engineered design.